Good morning, gang. Happy Saturday morning. And Saturdays follow Fridays. And now that Congress is back in session, what happens on Fridays? Oh, they slip that news into everybody that they figure the public will forget about by Monday morning because, there'll be a new Kardashian story or Prince Harry story that'll be more important, and it'll get the headlines on Fox and CNN and MSNBC, and the important stuff will be ignored, except by you and me. Okay. So yesterday, the Treasury Secretary, Janet Yellen, informed Congress that this Thursday, the government runs out of money, that we don't have any more borrowed money to pay the bills of the country, and that it's imperative that they raise the debt ceiling again to continue to pay the bills. Now, I'll give you this. Right now, spending that has already passed, has already been signed into law, is 50% more than the tax revenue that is brought in. Okay? If you put this into your household, look at it this way. If your household income is $50,000, you have $75,000 worth of annual bills. Okay? The government's idea is, well, we'll go out and borrow more money so we can pay our bills. That's the logic they're using. Okay? Now, Yellen's coming up and saying it's imperative, we have to do this, et cetera, et cetera, et cetera. Kevin McCarthy has already said that we are not raising the debt limit, the debt ceiling, without significant spending cuts. Okay, that some of this stupid stuff has got to go. And of course, the Democrats are saying that's not happening. We're keeping all the spending. We're just raising the debt limit. Okay. I want to give you how bad it is. Okay. Kareem JeanPierre, the press secretary for the president, okay, that rocket scientist that she is, this was her quote today. It is one of the basic items that Congress has to deal with, and that should be done without conditions. So there is going to be no negotiation over it. This is something that must get done. So the Biden administration has already said they don't care. Okay, we're going to do whatever he wants, and that's it. Now, we'll see what happens, but expect to hear a whole lot of talk about government shutdowns next week. Okay? Because the Republicans will probably, as usual, talk a big game and at the 11th hour cave. It's just my bet. Okay? Personally, I'd rather see a government shutdown. Now, when I say government shutdown, please don't everybody freak out, because I want to tell you what would happen if we did default. And basically, this would be defaulting on Treasury bonds, okay, where the government couldn't pay the interest. And just to give you an idea of how much we pay in interest, the U.S. government pays $965 million a day in interest on Treasury bonds. Okay, just giving you that figure. So the first thing that would happen would be we'd have a bunch of slashed government services. Now, one thing that does not get, or two things actually, Social Security and Medicare do not get cut. All right, they continue to get paid, and et cetera, et cetera. Even though the government has no ability to borrow the money to pay for it, you still get a check. It just bounces like a Super Bowl. Okay, you'll get your cash, but the government's got rubber checks all over the place. Okay. The next thing that happens, we get higher interest rates. Now, mind you, the Fed ain't going to complain about that because that's what they're doing, okay? You will see a huge sell-off. You'll probably see a sell-off going in Tuesday and Wednesday anyway, in the Treasury bonds, making interest rates go up because of the uncertainty over this. But if anything happens, you will see Treasury bonds being sold by foreign countries primarily, which will cause interest rates to go up. Just telling you that, okay? So if you're in the middle of buying a house or buying a car or something like that, yeah, expect to see interest rates potentially go up with all of this, okay? Next thing, expect to see the stock market really take it in the chops. All right. This would certainly cause some market panic to go on. This kind of goes back to what happened in the crash of 2008. Okay, something like that. Wouldn't think it's going to be as bad as what happens with COVID, but remember the last time we had the government shutdown. Okay, a run on the banks is a possibility. Okay, and especially on money market accounts. This is one of the things that did happen in 2008. And if you get a bank that comes up and says, we don't have enough cash for everybody to start taking their money out, look at what's happened in, I don't know, Indonesia, Venezuela, Zimbabwe, all these countries that have had runs on banks. That's a possibility. And especially how nervous that the American public is right now about the economy. A run on the banks is not out of the question. I'm not saying it's going to happen. I'm just saying this is what could happen with a shutdown or going Tuesday, Wednesday. All right. Gold. This is the one that gets real interesting. You would think that with a government shutdown and all of a sudden there's no money to pay the bills, the price of gold would go up, right? And it should. That would be the initial reaction. However, the next thing that you could have happen is you could have a gold sell-off to follow right behind it. And I'll give you why. If all of a sudden the U.S. government has to pay its bills, okay, they may have to sell off some of our gold reserves. Now, the United States has the largest gold reserves in the world. Little more than twice as much as Germany, who's number 2. All right, we've got, I think it's 8,233.5 tons of gold or whatever, somewhere thereabouts, which works out at closing price on Friday, about $502 billion worth of gold. That's how much physical gold the United States has. Now, don't think about this. Go back to Bretton Woods and the gold standard and everything. We're $31 trillion in debt. We have $502 billion in gold. Do you see where the problem goes? This is what's happened in 50 years. Okay, $502 billion where it used to be gold-backed dollars. Now we got all this debt that's backed by nothing. Okay, but to give you that idea, $502 billion, like I said earlier, we pay $965 million in interest a day. At current interest rates, we can pay the interest, if we sold every ounce of gold we had in the United States, the governments, we could pay the interest on our debt for 17 months. That's it. Okay, this is how close the U.S. is to financial catastrophe. Now, do I see that happening? No. All right, but depending on what happens, then finally what you get into are a downgrade of U.S. credit. Okay, and we had that happen once before under Obama, where we went from AAA to AA plus credit for the United States. The only time we've ever had the U.S. credit rating downgraded was thanks to Joe's predecessor, Joe's boss. Okay, let's follow the Obama plan because it worked so well the first time. What that does is that drives interest rates higher too, because obviously if you're more of a credit risk, the people that are loaning you money want more money to take the risk of loaning to you. Think about, buying your car with your 800 credit score and 0% interest, or your 400% credit, or your 400 credit score and going to some tote the note lot somewhere where they're charging you 26% or whatever it is. Okay, that's what we're looking at here. So how do we take care of this? How do we as preppers defend ourselves from this? What can happen? Like I said, Social Security not going to be touched, Medicare not going to be touched. My bet still is that at the 11th hour, the Republicans cave and they raise the debt ceiling. All right, not what I want to see. I actually want to see them let it go kablooey. All right, because I want the Democrats to finally realize that they don't have an unlimited checking account. And so what do we expect to see? The first thing I would say, make sure you've got some cash on you, because if there are bank runs and the banks close because they don't have any cash or the ATM's out of money or whatever, you're going to need some cash. Make sure you've got some. Precious metals, if you've got some, hang on to it. You might see a nice little jump in it here pretty soon, okay? I don't think we're going to have the big sell-off because I don't think the government's going to start selling its gold. So I think you're going to probably have more people going into the market, which will mean that you have an increase in gold and silver prices, which we saw Friday's close. It was good. Silver closed at like 24.41 and gold was up, what, 25 bucks an ounce or something like that on Friday, well over the 1900 level. So those things are good. But this is what you're going to have the next talk about. Remember what I said before, we have 50% more spending than we have income. You're going to start hearing, probably within the next week or so, about tax hikes. Okay? It'll come out of the Biden administration. It'll come out of the Senate, because the Republicans certainly aren't going to tell you about tax hikes to pay for Democrat pet projects. But expect to start hearing that. Plan accordingly. All right? You know, that'll start being the talk again. We find out Thursday if we are going to be moving forward or if we are in a government shutdown. But remember this, guys. If the government's going to completely screw us over, it'll probably happen on a Friday. This ain't the first one. But this might be a tip to what's coming. What are the bigger plans? Because when everybody wakes up on a Monday morning, that's when they open up the newspaper. Nobody checks it on Saturday, Sunday, except us. Pinball out.